welcome to today's more important chart appraisals with me, Richard Perry, market analyst at Hantec Markets on Thursday, 19th of October. There's a developing safe haven push in these markets, and that's come as the announcement this morning in the European session that the Spanish government is going to suspend Catalonian independence as a deadline for the Catalonian government to sort of make sure that they're not going to be pushing for independence has come and gone, and subsequently the markets have taken that as a big risk-off move, and we're seeing equity markets lower and safe haven trading higher. Now let me show you how that's affected these markets. Across the board, equities are lower now. We've also seen gold bouncing as well from earlier weakness, and also the yen stronger. Euro also has fallen away, having been stronger early doors. The big move of the day is two big moves actually. Sterling, with the announcement that retail sales for the UK came in worse than expected. Sterling has been hit on the back of the fact that retail sales dropped 0.8% on the headline. And that's the year-on-year data falling away again. And also the other big mover is the Kiwi. Look at the Kiwi, 1.7% weaker, and that's come on the announcement that the Labour Party is going to be forming a government in New Zealand, and that has been taken to be market negative for Kiwi. So certainly that is coming as the big sort of risk-off attitude has taken hold today. That's sort of been put the Kiwi under pressure. But what we are seeing is the dollar, which is sort of starting to sort of consolidate a little bit, but you can still see this head and shoulders reversal taking hold potentially, and that's coming as Treasury yields continue to sort of pull back higher, the 10-year, but also look at the 2-year higher yesterday. Bit lower today as that initial dollar and that initially hit the dollar, but certainly the sort of rising bond yields in the States is supportive for the dollar going forward, and yeah, that certainly seems to be the case today. So what else have we got to look forward to today? Well, bit of weekly jobless claims, bit of tier 2 data, actually second tier data, weekly jobless claims and Philly Fed this afternoon. Nothing too significant affecting that, but my chart of the day, I actually chose this yesterday, sort of saw this one yesterday as the support came in, is the Kiwi dollar. We saw the Kiwi dollar sort of bouncing off this uptrend yesterday, having corrected back to that uptrend. I sort of highlighted it last week on the breakout above that September high. It subsequently corrected back to that uptrend, found support bang on that uptrend, started to find that bull candle, but today it's just absolutely taken off as this announcement of the political control has come through the market, and that's a really strong move, and certainly turns technicals strongly positive once more, breaking out above the two resistance levels of the September and October highs. Any sort of intraday weakness, I think, on this one is now going to be seen as a buying opportunity. I suppose the 66.30 to 65.50 area is probably a decent area to look for maybe buying opportunities, but initial support, you'd argue, sort of 67 area, and then you'd start to think about sort of pushing on. Now, how high could this go? Well, if this market continues to go Kiwi negative, then certainly 69.30, that reaction high we saw from Q2 2016 could come back into play, but that uptrend is certainly in strong position now, and any sort of unwinding move back towards that uptrend, I suppose, is going to be seen as a chance to buy. So technically speaking, the Kiwi on Euro Kiwi is looking pretty much under pressure on the Kiwi, and Euro Kiwi pushing higher in with the back of that political move that we've seen that has weakened the Kiwi today. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.